I've managed to create a very lucrative passive income from trading in the Forex markets. And I know a lot of beginner traders have some issues where you get stopped out too early. A lot of times I'm seeing this, people complaining about how they're entering trades and getting stopped out almost immediately, or they've thought it was a very good trade to only be stopped out and then it goes to their take profit. There are some key issues here and I'm here to break down for you reasons why you may be getting stopped out and even ways to prevent being stopped out and being more efficient in the Forex market. If you're a beginner trader, you're excited because you've learned a new strategy or you're learning a new strategy and you want to implement that strategy and start making money. I understand that. It's a very fun and exciting time. But a lot of times you'll be trading in the wrong session. There are 3 sessions: Asian session, London session, and New York session. For me personally, I only trade in 2 sessions. The 2 major key sessions are London and New York. This is where the market moves a lot easier and will be a lot easier to read and understand. If you're trading early and you're trading in the Asian session, you might think it's a very good trade, but once it clocks over and goes into the London session, the market will be volatile. You won't know if it's going to spike up or come down to then continue with the trend. So if you're placing trades in the Asian session and it's not with the Japanese yen, you're going to have problems here with volatility. A trade may look like it's going to be a perfect take profit trade, and you think about it, it's in the Asian session, you might think, wow, this is a perfect entry, I've got it all set here. You place the trade and then an hour or 2 hours later, it's hit your stop loss. This is a very common occurrence for people that take trades early and in the wrong session, because a lot of the buyers and the sellers don't really come into play until these major sessions are in time frame. They will wait, they will place their entries in the London session, and there you will be stopped out. It's very important to note that the main moves in the market will happen in the London and New York session. In the Asian session, typically the only pairs that will still move with some sort of attitude and form to be able to strategize and actually capitalize on will be to do with the Japanese yen. So for instance, AUD JPY, USD JPY, these sort of pairs can still be traded effectively in the Asian market, but other pairs like Euro USD, they're not really going to come into play until that London session kicks in. So if you're placing a trade, it's just going to accumulate and just be static, and then it will erupt up or down to enter those sessions. This is where you'll find a lot of times you're getting stopped out and the trade you made was not necessarily a smart trade. Another issue that I'm seeing a lot of is people's stop loss. A lot of you are placing your stop loss just too small or too tight, and you're not actually placing the stop loss in the correct place. I'm going to come on my laptop and I'm going to show you some examples of what you're doing wrong and what you could do better with your stop loss, because I see a lot of people making tiny little stop losses as if they're going to scalp some wins to only be stopped out 4 out of 5 times. You need to understand what a decent sized stop loss is, where to place that stop loss so that you will not get stopped out on any sort of accumulation. That will be key for you to move forward and start winning a lot more trades. So I'm going to show you guys now some aspects of stop losses and why or why not they will work. Right, so for instance, we're going to have a look here at this pair, NZ CAD. It's just a random pair I've opened up. Let's have a look here. All right, so say here you wanted to enter a sell right about here. A lot of you will enter the sell right here and you'll place your stop loss right on this structure point. That's a very tight stop loss. A lot of times, yes, this might have played out to the trade. A lot of times this chart will come up and retest this area to then go down. You will get stopped out. What I recommend doing is when you place your stop loss here, always place the stop loss at the previous structure point. So you want to, if the trend is going down, you want to place your stop loss where you enter at the previous high or low. Therefore, you have more wriggle room. And if this price does come up to retest, you'll be safe. And if you're not safe, at least you know that the whole entire trade was incorrect. And if it goes up and stops you out here, right around here, that's going to mean that that pair is actually shifting structure to then head to the upside. So your whole entire analysis was wrong. This is easier to manage. If you know that, hey, this is a good trade, it should be going down, it's bearish, I'm going to place my stop loss right here at the previous lower high. So if it does stop me out, the market itself is just doing its thing and going the complete opposite direction. It wasn't a bad analysis. It was just the market doing what the market does. Because again, the market owes you nothing. The market will do whatever it wants. It'll go up, it'll go down, but you can capitalize on it. You place your stop loss at the previous lower high or the previous higher low if you're going up, right about here, and that will stop it from stopping you out with any unnecessary places. Another thing I like to do is once I put this stop loss here, I want to give it another 5 to 10 pips wriggle room just to be completely safe. So say if it's here, I'm going to move it up to here. Therefore, I'm now allowing myself a bigger stop loss. Yes, it's a bigger stop loss, but less room for failure. You go from the previous lower high, where if it breaks that previous high, you've literally changed the shift of structure to then head to the upside. Therefore, if you place it here and you give it 5 to 10 pips wriggle room, it gives you some breathing room just in case that market decides to come up to retest. I can show you another example. Let's just go to Euro GBP, why not? All right, let's say you wanted to enter a buy right about here. I'm going to enter my buy right here. Again, I'm going to break it down. A lot of common mistakes are you would place a very tight stop loss just below this structure point. Again, it's fine, but if that does just come down to retest this area here, you're going to get stopped out. What you would want to do is place your stop loss at that previous high low right down here. Gives you a decent 10 pip, and then you can also drop it a bit further. Gives you that wriggle room. You're not going to get stopped out. I can show you another example where if you placed the tight stop loss, it would stop you out. All right, so here is a prime example of a trade that got stopped out when it necessarily didn't have to be stopped out. This is the common occurrence of where it will stop you out to then head to your take profit, and it happens a lot. So I'm here to break this down. Here we had Euro AUD. We placed the enter right about here with the stop loss at the previous structure point. Like I said, the previous structure point, the previous higher low. The price came down and stopped us out to then shoot to the take profit. Here's what we could have done. If we placed our stop loss here, this is where we were trying to place it at the previous structure. It got stopped out. This is usually right. You place it at that previous structure, it should be fine. But a lot of times the market will still go down, retest, and stop you out. To maximize your efficiency here, always do the previous structure point and add another 5 to 10 pips right here. If you placed it here and you gave it another 10 pips, that price would not have stopped you out and you would have got your take profit. It happens all the time. Another example would be right here. If you place your stop loss right there and you place it to the previous structure, that would have stopped you out again. When you give that 5 to 10 pip wriggle room, it would not have stopped you out. You would have maximized on this trade and you will make more money. So you're placing your stop losses in the wrong places. You're placing them a lot too tight. You're not giving it the wiggle room. You're not understanding where the previous structure or the higher, lower high is to place that stop loss, and you're losing money that is sitting there waiting for you to make. The final thing that I see with a lot of beginner traders that is making you get stopped out all the time is you're not really paying attention to the overall trend of that pair. A lot of you are learning from someone and trying to micro trade, trying to scalp. These are all good things if you have the knowledge on it, but again, you need to follow an overall trend. You need to analyze these charts. You need to make sure that what trade you're placing is going with the trend. You want to stay within the trend as much as possible to maximize your trades. If you make a trade and the daily is bullish, the weekly is bullish, and you're getting it on a 4 hour and it's bullish, you have a lot more confluences to make up a decent trade to the upside. It doesn't make a lot of sense to jump in on a sell if 4-hour daily and weekly are all going up. You're literally saying, hey, here market, take my money. I'm just guessing now. And it's not a game of guessing. It's a game of strategy, a game of patience, and a game of waiting and seeing what the markets are giving you as an opportunity. It's a very volatile game. If you go in at the wrong time and you place stupid trades, you're going to lose all your capital. You need to make sure that your stop loss is placed correctly. It's not too tight. You need to make sure that you're in the right trading session, and you need to make sure that you are going with a trend, because the trend will allow you to make more money. If something's going up, why not jump on with it? If it's going down, let it come down, place the trade, make the money. Stop trying to go against the grain. This isn't new stuff. This is basic things that if you can master, you will not get stopped out as much as you are now. If you've found this video beneficial, subscribe to my channel, and if you want more in-depth breakdowns, subscribe to my mailing list and join thousands of other people getting weekly information for free. Thanks for watching, and I'll see you on the next one.